Welcome to Prophetic Queen. Let God speak up us. God wants to speak today. Welcome to Prophetic Queen. Let God speak. He will lead and guide you. He will lead and guide you. Today's your day. Today's your turn. Welcome to Prophetic Queen. Welcome to Prophetic Queen. Let God speak up us. God wants to speak today. Welcome to Prophetic Queen. Let God speak. He will lead and guide you. He will lead and guide you. Today's your day. Today's your turn.
Hey guys, this is Dr. Nabi about Yehuda, bringing you intimate truth. It's the truth that you embrace that makes you free. I am super excited because I know I'm always excited, right? Because I have good people on the show. So last week we had Don Daniel from the Pill Method, Pill. Go look him up if you don't know who that is. And he was just talking about homes and mortgages and all that good stuff. If you didn't see it, go look in the playlist. It's in there. Debt elimination. And so this week we have Kenesha Wood. I'm really excited because if you guys are looking for a home, especially you first time home buyers, you do not want to miss this. We're going to be covering, those mistakes that most people make. We're going to talk about how to avoid that. We're going to be talking about credit and credit repair. And is that like a real thing? Is it really necessary? Maybe. I say maybe not, but yeah, we'll talk about that later. All right, so I just want to welcome Kenesha. How are you, beloved? Oh my, you're frozen. Kenesha? Oh, see, this is what happens when you go live. Oh my goodness. I'm going to back out for a second and let her come back in. So yeah, we're going to be talking about purchasing a home. We're going to be talking about all those questions that you have as first-time home owners, home buyers. What's the difference between renting, or what's the benefit of renting versus buying? And so we want to make sure that, oh, she's back. Yay. So we want to make sure that you get all of your questions answered, because there are a lot of questions when it comes to purchasing homes. There's questions around credit, about debt to income ratios, all of that. Y'all know I'm a licensed realtor, so I do know some things. All right, so we're going to try this again. Kenesha!
We know a little bit because we've seen so much, right? That it's easier for us to understand what's happening and the oops and the mistakes and the curveballs that get thrown at us. So you get to understand some of it. And I
Yes.
always say to people, it's never, no two people is ever the same. No matter how it looks just the same, it's just never the same, right?
Right, right,
Thank you so
right.
much for having me, though. I appreciate you having me on your show. And it was great meeting you, for
Yeah.
sure.
Yeah, it's really this I first of all, I love educating people. The reason why we fall into so many pits is because I didn't know. I didn't know. And so
Hmm.
the problem is, oh wait a minute. I see we got some warnings over here. Okay. Okay. I'm gonna switch my no. Well, I don't have on my well, you sound good to me. I'm gonna go into my little thing for a second and see if I can find out from my viewers. Are we go for sound, guys? Let me know if there's any echo, any feedback. Cause see, I tested it earlier. We were good. We were good. Let me ask
It's
them.
always when you go live, right? This is why it's the same thing as home ownership. Nothing ever goes smoothly as planned.
Let's start there.
nothing ever goes smoothly as planned, and you have to, no matter how much preparation that you make. Now, and you see, you and I did the testing, we prepared so many times, and even the same thing with home ownership. No matter how much you teach and you educate and you dot the i's and cross the t's, you could always something, a curveball or something that may go wrong. And the thing is, because of your preparation, you may be able to circumvent that, right?
Mhm.
So preparation still is the key, and preparation is still happening, but it doesn't mean that you're gonna get to the end goal, like get your key to your home or become a homeowner without any
Right.
hiccups or any things, no matter how much you prepare, because things happened.
That.
And sometimes, it helps you learn. I always tell people that it happens so you can learn. So the next time you become a next home, when you buy your next property, you
Hmm.
know what to look out for.
That part. That part. So I know that. Okay. Okay. Your guest is echoing. Is it good? Okay. She said it's good now. All right.
Okay.
See, thank God for technology. So, and Miss Sherry LaFall, she's a realtor. She's not in Florida. She is in Seattle. She's out there. So,
Ooh.
yeah.
The
So,
weather over there must be nice now. No, not really. Come to Florida. We have nice weather now. From one realtor to the next realtor.
exactly.
We got room. Don't let anyone tell you. We do have a lot of rooms because we're always building here in Florida.
Always, always, always. So we're going to be talking about purchasing homes, and it's going to be specifically for Florida, but some of the rules are pretty general across the board, like credit, things that you need to know about purchasing the home versus renting and those benefits. She's laughing. She's
Because she knows I'm telling the truth.
I know, right? So, first of all, you're from Kingston, Jamaica. Yes?
Yes. Yes, born and half raised in Kingston, Jamaica. I
Uh-huh.
actually went to a really good high school down there too. If
Hmm.
anybody's listening, I went to Holy Child High School. It was an all-girl Catholic school. And boy, was it fun.
Oh,
Not
wow.
really. Um,
Oh,
and then I immigrated to Brooklyn, New York. And
okay.
then after I had my son, and
Hmm.
this is why I'm telling the person in Seattle she needs to come over this side. I was so tired of the cold in New York. And I was like, after I had my son in 2010, I was like, not another winter, Lord, not another winter. I
Right.
gotta make my way to Florida. I need some warmth. And here I am in Florida.
How long you've been here in Florida?
I moved here August 2010. So my son was born June 1st, and we packed up everything that we can and we gave away everything that we didn't even want to sell anything. We gave everything away.
Oh, wow.
And it was like a last minute impulse decision on a couple months of planning. And thank God for my sister that was living in, she was becoming a homeowner. She got excited. So instead of buying like a 3 bedroom, she ended up buying a 4 bedroom because I had no place to stay, no job. I had some plans, but I don't know if the plan was like a solid plan, but I planned enough. I just knew I did not want to be in New York for another winter. Whatever it takes, I knew I was going to move from New York
Mm,
and move to Florida. And that's what I did. And I think it's what, for me personally, was one of the best decisions.
right. Okay, so let's get into it. I have
Yes.
some questions, and
Ooh.
I have questions because people want to know, people want answers,
And
and
she did not prepare me, guys. Anybody's listening, she did not prepare me with these questions.
I
So
sure
this is
didn't.
this
That,
is true answers.
yeah, yeah. I don't do pre-questions. I don't do that because listen, it's like we're just sitting, we're on the couch, we're talking. We got a beverage,
Exactly.
we're good. So, and of course, I can't. I'm not ever gonna ask people questions that they don't have an answer for. So, I wanted to just ask pretty much. Well, first of all, what was it about real estate or something that perhaps you saw growing up that wanted to make you move in this direction? Because I want to get a. I'm looking
I
at
see.
the Sherry's answer. Oh, is that about coming to Florida? Come,
Yeah, yeah, sure. Let inbox me when you finish. Let's start. Let me figure out how we can help you. But
there's her
I
number
became
up there. There's her number up there.
I started doing real estate more so, or home ownership, I should say, before I ever became a realtor. I had the passion. So we're gonna go back to when I lived in Brooklyn, New York. I After I had my first daughter, I went back. I've always been in a nonprofit space ever since I was in high school. I'm always volunteering in a nonprofit space, and it so happened that the nonprofit I was volunteering in when I was in high school after graduation and having my daughter, I actually started working with them. And I started working the executive assistant, as an executive assistant for the executive director, who's also the attorney for the one of the largest nonprofit in Brooklyn. And I saw a need. I saw that we were doing small business classes, and I was teaching people how to become a business owner, how to, do the next steps, what need to be done. And what I didn't see is a lot of them, how can we create generational wealth, mainly for the minority population. And that area was filled with a lot of minority and immigrants, and those are coming in. And I'm like, why are we doing teaching them to become a business person, but not then once they come to have that money, how they could keep building generational wealth and keeping that money in their family through home ownership and real estate. And so I went to my boss and said, hey, can we create this class? Can we create a program? And they flat out told me no. I'm like, well, that stings. And so
Mm,
I went and I started researching on my own. I started taking classes with one of the national organization that, help nonprofit. I take the class and I got certified. It so happened that, the foreclosure crisis was beginning to happen at that time. And I was the only one. They were like, oh, how can we get money? So I put in a grind, I put in a proposal to the company without them knowing, and we got it. And because I got it, I went back to my boss and said, hey, we could get this. We have this grant. It's a foreclosure, but we need to be able to start helping those that's in our community to become homeowner. So I already have the plan. I already created the home buying workshop. I created the council section because I got certified on my own with my own money because I felt there's a need. If they weren't going to make the next step, I see a need that I could do it on my own, whether they want to or not. And I could have done it on my own to help my community members who desperately needed it. And we got a grant for foreclosure, but not for the home ownership side. So I created even another step, another plan in teaching the first time home buying classes that I now teach still. And I started creating. And the first week, I promise you, the first month I did this class, we had over 50 people in the class. And then they realized, oh, there is a need for this class. So we
mm,
put in a grant and we were able to get a grant from her to start doing more of these classes. So I've been teaching and developing these workshops in the real estate space because I saw a need and no one else saw it. They saw a need like for where they could actually get a grant. I saw a need that my community could benefit from it. And right now you can see this one of the biggest program for for them, and they still have the program in their company. They still
mhm,
have not let go because they're still getting it. So I started doing that because I saw a need, and I've always saw a need in doing that because even if the person's not ready to buy a home, giving them the tools and the education and resources to get them there or help them prepare to become a homeowner is
mhm,
what we need. I don't see a reason why not. I'm not saying that we're going to teach them today to become a homeowner and they become a homeowner next month or in 6 months. It's the preparation part. They may become a homeowner in another year or 2 years, or they may say, you know what, Kenesha, I don't think homeownership is for me because I don't want all this responsibility. And that's fine. But then what you don't know. And they wouldn't have known that or have that understanding without getting the education part. So
right.
that's how I started my journey in homeownership way before I became a realtor.
Okay. And what's the name of your realty?
Well, I currently work with Remax Prestige. I've been a realtor now for like maybe 5 years. At my official title as a realtor, maybe for 5 years, I've done. I am HUD certified. I've done a lot of HUD classes. I've been boots on the ground to Washington D.C. before, Congress, trying to get stuff done. But I currently hang my license at Remax.
Okay. Wow, that's impressive. And so, so you're getting, yeah, so you're in the trenches, you're seeing a lot that's going on. You're seeing what's going on in the community. So you pretty much have your hand on the pulse of what's happening. And so you can
Hmm.
pretty much see where the disconnects are. And I know for me, when I'm talking to people in that space, I know we have a lot of conversations around credit and credit repair. And there are some myths about credit repair and how we think that we're supposed to pay somebody to fix the credit. And maybe sometimes you do, and that's okay. But the general rule is, yeah, you really don't. But can you speak to us about that?
I always say to people, you can't fix something that's not broken. Okay, credit is not technically broken.
Mm-hmm.
So when people say, I'm going to fix the credit, repairing your credit, what exactly you're repairing? I think what
Mm-hmm.
it is about people, switching how they handle their spending, switching how they handle their expenses, and start changing the behavior they have to a positive one. For example, I know a lot of us love to do calculation in our head, and we all say we're going to remember, or we all think, okay, I make this much money and I have this much bills, so therefore I have enough. What we don't really see is all the oops that happen, all the little things in between that we're spending our money on. To somebody who's making a $2,000, income, they may be calculating their gross income instead of their net income and like, okay, this is the income that I would love to take home, but no, this is not the income you take home. You take in, $1,500, whereas your expenses each month is $1,300 or maybe $1,400, and so you don't have the chance for that. So I always tell people, do a budget. You put pen to paper until you start practicing that more often and get a full grasp of what your budget is. You won't know what it is. Because I
Mm-hmm.
have people and they were like, oh no, I have enough money. And I will sit down with them when I used to do the housing counseling piece. And even now as a realtor, I'll sit down with a person and say, hey, tell me what you think your budget is and tell me what you think you could afford to buy, right? And tell
Mm-hmm.
me all the expenses. They give it the basic expenses, but not all all the others that they need to do, like your insurance for your car.
Mm-hmm.
Maybe if you have children, we still have to buy food. We forget that we have to buy groceries, which we know is not very much cheap anymore, right? Yeah, it's like I'm like, I want to eat, or gas for your car, and you realize that the expensive for gas is there, or little things that we are doing, on a daily basis. Sometimes you may want to treat yourself, and the treat becomes on a daily basis. But
Mm-hmm.
what you don't realize is that you may not have enough to pay your bills. So now you start robbing Peter to pay Paul because we're not putting that budget. The problem we have is that we don't budget, or
Mm-hmm.
we no longer do checks and balances. Back in the, not to age myself, but back in the days, we used to use checkbooks, right? And we used to
Yeah.
do balance or checkbook. This is my check, check number 102. When we write this check for Chase or FPL or the light bill, and we balance that. We don't do that anymore. So no, realistically, we're not even keeping track of what our bank account is, or what else is there to be done. And
Mm-hmm.
because of that, we start developing behaviors that negatively impact us, right? We start overspending on our credit cards, realizing that you shouldn't be spending more than 30% off your, what they give to you. If
Mm-hmm.
they give you $1,000, don't owe them more than $500 each month. Don't spend that, because
Mm-hmm.
the more you owe each time, more than 30%, it's going to negatively impact your credit.
That's
And
right.
I know I get it, because sometimes things happen and sometimes there's emergency and you have to do things, but not when you have to do that on all your credit cards, right?
Mm-hmm.
Is there a time you need to talk to someone about credit? You can, but you don't need to go to a credit repair person. And no shade to anyone with a credit repair person, because I have
Oh
friends
yeah.
who does a credit repair businesses. But there also are nonprofits that's out there that will help and guide you with the credit situation, that have the conversation with you, help you with the budget so you could start, having positive behavior and action each month by creating a budget, by looking at it each month before the bill, seeing exactly when each bill is due. Because your light bill is never the same, your water bill is never the same, the gas bill may not have been the same. Those going to fluctuate, right? So we need to get a full grasp of it. But you have to start with a budget, actually looking at it, from pen to paper and seeing what my budget is, and keep it on your refrigerator so you can see that once you start doing that and doing checking off all the bills that you pay and dotting all the I's and crossing the T for that, you will see the difference on how you spend in your money.
Hmm. Yeah. And so that's I'm trying to get back to this. So, and I think that's where the one of the disconnects are, just one of them. And
Hmm.
so one of the other things I wanted to ask you about, especially around credit, most people don't realize there's different types of credit. And so the
Hmm.
way you go for a house is not the same way that you will go for a car, because the criteria is different on how they're pulling the credit. We got
Correct.
revolving credit. We have all types of credit. And so I know that in order to get ahead, we really have to start, like you said, putting pen to paper, paying attention to what you're spending, because especially like when you're eating out a lot, you don't really pay attention to how that's adding up, adding up, adding up, and it's stealing from your goal of getting a house. And you think, well, $20 is not that much, or $10 is not that much, but it's adding up every single time you spend it or you're swiping. So, and
You ever been to the Dollar Tree? It's like going to the Dollar Tree.
oh
We
my
go to the
God, the
Dollar
Dollar
Tree,
Tree
and
is a
because the
trick.
Dollar Tree is a dollar, right? And we're like, oh my goodness, oh my God, it's just a dollar. Oh my God, it's just a dollar. Oh
It's
my
like,
goodness, oh, this is so cute. It's just a dollar, right? And then all of a sudden you reach your register, and that dollar that you thought you was only going to spend $5 become $50. True story, because it happened to me all the time. They always joke with me, and I said to them, I hate coming into your guys' store. I hate coming to your store because every time I come, I feel like I spend on things that I don't really want. So I don't. I so they were like, I don't see you in the store anymore. I say, no, why I don't come in the store? Because every time I think I'm just gonna buy these two things, I end up spending more than what it is. That impulse buying happens. It happens to the best of us, right? So I
mhm,
avoid now. I no longer go Dollar Tree for no reason at all. I avoid the stores that will make me do things I know I shouldn't be doing by buying these things that I know that I'm gonna use but never use and stayed 5 Christmases later and 5 holidays later. I'm like, oh my goodness, this is a thing I bought I thought I was going to use next month or in this week. It
yeah,
happens to all of us, right?
yeah,
And I said to people, I used to tell people with people like that, I said, we used to have what we call envelope monies or pocket money. You take an envelope each week and you put a certain amount of money in that envelope
mhm,
and you just use whatever cash it is. You do not use your credit card. You don't use your debit card. And whenever that money ends, it ends. If you give yourself $50 for that week and it ends in Tuesday, that's your bad. Then you have to go without whatever else it is for the rest of the week. That kind of build discipline, right? Because now you're not impulse spending. Because we all do that impulse spending, Lord, especially when you see that buy one get one. Sometimes like you go buy more, you go to Publix and you like this buy one get one thing, but you really and truly don't want it. You don't need it, and you don't want it, but because you think there's a sale, you buy it.
yeah,
But then you forgot your budget
yeah.
that you worked on.
Right, yeah, exactly. So, okay, let me ask the question that people want to know. How much money do you really need to buy a house? Like, how much money do you really need? And how do you prepare for what that is? I think you mentioned something in the certification meeting, how you might want to buy a house that's $300,000, but you don't really know if you can really afford the 300. So, like, can you answer that? Like, how much money do you really need?
Believe it or not, it depends, right? And I say this to people, and so like you go back to the $300,000 house because you were listening to when I do these workshop, and I do a lot of the first time I'm buying workshops still for various nonprofit because I
Yeah.
actually love teaching and educating. I don't like talking to people face to face. generally, but teaching and educating in this subject, it's my thing that I love to do. I always say the amount of money you may need is depends on sometimes whether or not which lender you go into, whether or not there's programs. There are lenders out there that has money that could give to you that could help with the money that you may need for the down payment and closing cost assistance. But if you don't have that, then you need to start saving realistically at least $20,000 for like at least a $300,000 house. Interest rate at this moment is a little bit high because of the climate of the economy. That's whatever is happening now around the world, in the United States and the world. So
Mm-hmm.
the interest rate is a little bit higher. So maybe if the lender had approved you for a $300,000 house loan a month ago, that $300,000 approval might be less now because the interest rate is a little bit higher.
Mm-hmm.
But when you're buying a house, you don't need 20% down for sure. Don't let anyone tell you need 20% down. And I know a lot of us is prone to go to the FHA loan because that's a loan that is given to you, because of your budget or because of your limitations. But
Mm-hmm.
I say to someone, if you could go beyond an FHA loan, which is 3.5% down, you
Mm-hmm.
should do so. You should probably go take advantage of like the Fannie Mae or Freddie Mac loan, which is only 3% down, or a lender that has a 3% loan down. And I'll tell you why.
Mm-hmm.
With the FHA loan, when you put 3.5%, because you did not put 20% down, they kind of said, shame on you in a sense for not putting 20% down. So I'm going to hit you with something we call PMI, private mortgage insurance.
Yes, yes, yes.
That PMI, people are like, oh yeah, oh cool, that's cool. I could get a PMI. It doesn't protect you as a buyer. It's no protection to you as a buyer. That
Mm-mm.
PMI, private mortgage insurance or mortgage insurance, is only
It,
protecting a
it's
lender for
protecting
taking
them.
a chance.
Yes.
Right, for taking a chance in lending you money for you putting less than 3.5% down. Because of that, you now have your principal, interest, taxes, insurance, and now the PMI. And if you live in an HOA, they started living in a homeowner association community,
Oh my
now
God.
you have a sixth payment, right? On your monthly mortgage. So now this is why I come back again. So it's coming back to your budget. When I tell people the lender might say, hey, you know what? I'm going to lend you $300,000 loan, but you may not be able to afford $300,000 mortgage because based on your true budget, because remember the lender is only looking at what's on your credit report. Whatever's shown in your credit report is what they use, to determine lending for you. However, what is not on your credit report?
Hmm.
Food, maybe. You may not need to eat. You may be like me that need to lose a little bit of extra weight. So you decide that you don't want to cook food or you don't need to eat food. But sometimes, occasionally you may want to eat, right? And I like food. So no,
Right.
I'm not going to give up my food. And so what else is not on the credit report? Your utility bills is not on your credit report. I
That
know they're
no,
laughing.
it's not on your credit report. No.
The fact that you need car insurance is not incredible unless you want to be like some people and drive your car around without insurance, which is never a good thing. So you're gonna want to have car insurance. You're gonna want to have to pay if you have children, maybe some form of activity fees, some form of daycare fees, whatever. There's a slew of things that's not in your credit report that
Wait,
the
I want
lenders
to ask the
doesn't take into
question.
account.
I want to ask question for somebody out there. Does somebody
Okay.
out there have did anybody out there have their children on the credit report? Uh, Anybody? Children on your credit report? Are they on your credit report? Like I had to buy them shoes and I had to get them clothes and oh that's right this week I gotta feed them. Are your children on your credit? It's not on your credit report.
It's not in your
So
credit report.
yeah, so these are all these things that we still have to look at. It's so important, and I do want to say something, um, especially about what lenders are looking at. And
Hmm.
and anybody that ever talked to me about purchasing property, I always tell them it's just as easy to buy a multifamily than it is a single.
Correct.
And the lenders are looking
Correct.
at income. And so when you have It could be a duplex, a triplex. If you go beyond four, now you're looking at commercial, but we're not doing that. That's a different conversation. And so you might have you might have three other, and it also depends on if you're going to live in it or not, because that makes a difference.
Mm-hmm.
And so what they do is they tally up, let's say the rent is $1,600 a month for each apartment,
Other
for each
units.
rental,
Correct.
for each unit. If you're going to live in it, okay, they're not going to count that. But if you're just going to own it, I want to say something about living in it because that's a whole nother thing. But let's say, yeah, you're going to live in it. It's a fourplex. You got three other units. They're going to take 75% of that and they're going
And
to
put
add that.
towards the rent
Right. They're going to add
to
that.
your
So
income.
to your income. But a lot of people don't know that.
And I'm glad you said that because I think in one of the classes I was teaching, I don't know if you were sitting in that one. I said to people the same thing. If the lender decide that they want to give you a certain amount of money to buy a house,
Mm-hmm.
expand your search beyond a single family house and look for a
Yes.
duplex because the duplex is your income. Because when you have your kids living in your household, they ain't paying you no rent. Some of them may not be old enough, or some of them may be old enough, but they don't have a job, so they're still not paying you rent. So what's the best way for you to capitalize on your new form of home ownership is by getting a duplex where you could get the income from the second portion of it towards your mortgage and cover majority of your mortgage. And if you plan it right, you may be able to cover all of the mortgage. Depends. I've known
Right.
people who have gotten duplexes and one side might have 3 bedroom, but instead of renting it out to one person, they rent out that duplex to 3 different people,
Yes.
which means they're renting each room, which means they're capitalizing as much as they can by getting more rental income from that extra unit. And what a better way to become a new homeowner and get your mortgage pay or almost all your mortgage pay, right? Without worrying about anything else. Because we see what happened a few years ago when the economy shut down. That was one way for them to people were getting their rental income still, because some people
Mm-hmm.
still did work. And if they didn't work, they were getting some form of subsidy or, help. But your
Mm-hmm.
mortgage still have to pay and you didn't have, you could get that cover in the meantime. So I
Mm-hmm.
always say to people, look, if I knew better, I probably knew better. But when I was buying my house, I was 8 months pregnant. I did not have time to think anywhere beyond anything else, right? 8.5 months pregnant. I was like ready to be over everything else, you know. But in hindsight, if I wasn't feel like I was being rushed to buy, I would have take my time and actually look more into a duplex, or full family as high as I can go as the first time I'm buying, still get my loan or
Yeah.
still get any grant and assistance out there to have become our home buyer.
Mm-hmm.
So yeah, I love the fact that you brought up the duplex because I always tell people first and foremost look into what you can get beyond just a single family house because there's so much more out there you can do, and you don't always have to start with the house that you dream of. Remember, this is your
Right.
first house.
Yes.
This is a stepping stone. This is a home that's going to build you all the equity you want, where you could take the equity out if you want to and purchase another property and become an investor,
Mm-hmm.
right? Or sell the house, take the equity out, and buy the dream house close to the dream house that you wanted. So remember, your first house is never your dream house. So you want to start somewhere
Yeah.
that is affordable, not where you're going to lose it. You work too hard for this.
Right. Yeah. I mean, it's really about setting yourself up for success. So I
Correct.
kind of was stumbling a little bit because I have a lot of different thoughts about living in the property versus not living in the property and what the lenders are looking for. And if you're getting what they call a first time home buyer, if you go to NACA, if you go to USDA, which are great programs, and then there's no down payment. They have down payment assistance, but then there are requirements like you have to live in the property. So
Yeah.
So, so
Because
it's
for the
different.
first time
Yeah.
home buyer, you as a first time home buyer, especially if you're getting any loan product, you certified, and people don't realize it's not. It doesn't matter if you're doing FHA, Fannie Mae, or conventional. You're certifying that
Hmm.
coming in that this is going to be a primary home,
Yeah.
and if within no time, if not, it doesn't become your primary home anymore. They look at you like, okay, that wasn't the intention. You can switch it from it being your primary home after a number of years or even a year in between because maybe something happened, maybe you have to move, whatever circumstances. But you can't immediately get the key and then next month decide that this is not your primary home. You gotta at least pretend it is for a few months. With a NACA program, and I know like the NACA program, I worked to a program from I lived in Brooklyn. It's a good program to get involved with.
Hmm.
It does take time. You do need patience and due diligence a lot. It is
Yeah.
a program. It's not quick. It's not is the easiest to work with. It takes 12 plus months at times for you to get into it. But the interest rate they give because they have that partnership with the lender really is Bank of America because the partnership they have with the banking
Hmm.
entity,
Yes.
you get that sweet spot of an interest rate and the program. There are also if you have a USDA, if you're military, you get a VA loan, a veterans loan, you
Hmm.
don't need any down payment either. And technically, there's no credit score requirement. However, there are banking institute that's going to say no. VA may not require a credit score.
Yeah.
However, we do in order to lend you money. So even though you might hear, well, VA doesn't require me to have a credit score. That's fine. They don't require. If it's your only requirement for have a 580 credit score, that's
Hmm.
fine. But remember, when you go to that lending institute, they have their own guidelines. They are going to require you to meet at least their basic minimum
Hmm.
credit score. And realistically, do you really want to buy a house at a 580 credit score, even if they can give it to you?
Yeah.
I'll say take your
Yeah.
time and work on it because you're going to be paying so much money back that you're going to realize you're going to kick yourself and say, you know what, I could have worked on my credit, improve it a bit much, and then go for a loan. There it.
Yeah. Correct me if I'm wrong. I think that the minimum overall is either 620 or 640 to purchase
For
a
which one?
for just in general is 620
No,
because I
it's
know
for FH
FHA is 580 and that's pretty
580.
low. That's pretty low. But like you said, you don't really want to like I mean that's like coming at
620.
that's
620 is a
yeah,
sweet spot for
yeah.
most of them. There are grant program like Palm Beach County, like not Florida itself has a down payment assistance program. A lot of people don't take advantage of. Their minimum credit score is 640. They do have a grant portion of it, and the other portion that you have to pay back, and that's 640 credit score. I think they increased it a bit much. And but for most lender, they want you to have a 620 credit score. But sometimes for their grant program, it may say you need to have a 660 credit score to get a little bit more
Mm-hmm.
of what they want to give to you. So
Mm-hmm.
you want to work at least on the sweet spot of the 620 credit score when you decide you want to buy a home.
Yeah. Yeah. And I mean shout out to the people in the struggle with the credit cards.
But,
Shout out.
oh
I've
man, it is.
been there, done that. And just, take your time, make your payments. Don't be late. Look at the due date. Look at the statement date. Look at those things because it matters. Don't just, I only have to pay $20. Give them 25. Give them 30. Always
Even
give
give
them
them
more.
21, as long as they
It's,
pay even a
right.
dollar more, they have to report that you paid more than the minimum, right? They can't
Yes.
say you paid the bare minimum, even if you give a dollar more. Now it's going to pay like, you're paying more than the minimum. So whatever it is, even if they pay the minimum, pay the minimum. If you have to do anything so you don't miss a payment, at least pay the minimum.
Oh,
But if
at
you can
least.
pay an
Right.
extra dollar, pay that extra dollar, and because
Yeah.
it's gonna matter. It's really gonna matter, and you're gonna feel so much relief knowing that you are gonna get a loan and not like
Yeah.
a crappy loan. And now you're gonna get a good loan, but the interest rate is gonna be so crappy they end up paying back so much.
Yeah. Oh yeah. Yeah, yeah, yeah. This and it's really at the end of the day it's not worth it. I wanted to ask you about increasing the credit score. Like I know people
Hmm.
talk about how quickly credit scores can raise. So generally, how long does it take for your credit score to jump? I personally know that, the more you're throwing money at your cards and your debt, that's going to increase the credit score. But I also know that there are people that, well, let me just pay this person and I can jump my score up 50 points.
So in terms of how long does it take, it's not a big magical formula. It's not just about paying your credit card. It's
Hmm.
also about the different types of credit you have, right? So
Yes.
if you have a credit card that's, and then you have a revolving one, those kind of help. Like if you have a small loan, I tell people you could go to the bank if you have a bank or credit union, wherever you have, and
Hmm.
get what we call a secured credit card. They'll report that as a loan. They're a little tight. Back in the days, it was easy for them to get without any hassle. Now,
Hmm.
some place might give you a little bit of a hard time to get in a secured credit card, but that will be reported as a loan. That helps you when you pay a credit card with a little bit beyond what the minimum payment is. That helps increase the score. If you do not use more than 30% of what they give to you, that will help with the credit score. And sometimes new credit helps with it, but
Hmm.
what won't help you is if you go around shopping. They'll see that you like, we're talking about people who shop for credit, like you're on the side, applying for a credit card, applying. What that signal for me is that you're desperate. Something is wrong, and you're trying to get credit to do something. Maybe you're in debt, so much debt that you're trying to get these credits to pay off a debt, only for you to go in more debt. So what you're doing is recycling the debt. And we used to look at that when we do credit. I'm like, we look and you see that there's a red flags. You can't then go out and buy a car. And I know your car, you might thinking, okay, I need to, compete with my neighbor or, my family member, or I definitely need to change my car. Car payments, is now the biggest factor that we've seen that's hindering a person from becoming a homeowner, because the car payments is so high that
Hmm.
it takes up more of your debt towards any mortgage payment. And because of that, it will definitely make your credit score go down instead. But if you keep your credit card balances at least 30%, you're not over exhausting credit, and you're
Hmm.
not keep trying to shop for credit, and at least have like a credit card or a secured loan. That will help you. There's a few programs out there that doesn't cost you anything and won't hindering you by taking those out, and they do a monthly payment and help. If you're a renter at this moment, there are sites or there's programs that you could go into. You might have to pay a small fee, but it's so worth it that they will let you report your rental income,
Yeah.
which will greatly boost your credit score so much, right?
Hmm.
And some of them will do the same thing for your utility bills, where it help boost your credit score. And that, because most small company or landlords doesn't report, because it costs them to report to the credit bureau, then you could join these programs that will do so for you for a small fee. Is that small fee worth it? That's a fee that's worth it, not Starbucks fee, but this fee is more worth it for you to increase and improve your credit score, than anything else. I say take the chance, and I definitely do a programs like those.
Okay, so not Starbucks and not Amazon. You gotta weigh what's important, what's important. So, and
And
I
don't get an Amazon credit card for the love of Betsy.
love a Betsy. Your Honor, could you
I know, I said that last.
strike that from the testimonies? Says it, the love of Betsy. Um, so yeah, we just want to learn how to. I mean, this is like adulting 101, and
Yeah,
and
you
there's
could go so much in depth with this. This is like a conversation that that
yeah,
that could go on forever if
yeah,
we have to, break it down even more. Because I think even though some of us are adults, certain things they stop teaching in school, right? They no longer teach those things, and we don't get that. Because my children, them, I know if my daughter is 22, right? I don't know if they were ever taught them how to check some balance and how to write a check. And you think they're old enough, they should have known that. But that's all stuff that you and I probably learned when we were younger and we were in school. Cause they do home and economic, they do all these stuff. But they don't teach them the find. Some school are not bringing it back. Thank goodness it's gonna come. Some school are
Are they
implementing
really?
financing.
Are really?
I've heard one school so far they've and I know it's in Palm Beach. I gotta go back, or maybe ask my sister because she's a teacher. They voted for them to start doing finance class, specific finance class in school. I'm like, can we do that for all the school? Because it's lacking. Because if they start teaching them finance and the basic of it, when we get to this age that you and I are at, it'll
Mm-hmm.
make it so much easier. When we get to the part where we want to,
Yeah.
become a homeowner, it becomes easier. But the thing is, these kids are also exposed to so many tools. We just have to make sure and give it to them or expose them to those instead of the YouTube, instead of the TikTok, and instead of the and believe it or not, TikTok has some great finances. If you really want to use an app properly, I've been on TikTok a lot, and they have a lot of programs, a lot of live hosts that actually teaches financing, teaches, all this stuff. And sometimes I go live, and some of my lives about, financing and home ownership. I've done that. I'm going back to start doing that again. But if you utilize the programs that you have out there, you could position yourself in a way that you could become a smart homeowner. But the best way, I think, I always tell people, reach out to a local nonprofit organization
Mm-hmm.
and take their home buying class. And then once you finish the class, you could sit down with them one on one, and they go in depth with you with your budget. They make you do a budget. So now you're forced to actually see what your expenses are and what your true income is. And when I talk about income, I'm not talking, again, not your gross income, the income that you would love to take home. That's
Mm-hmm.
not what you have to do. You're using a net income, the one when they take all the money out and leave you with this.
Mm-hmm.
Right? And they make you do it. So I think the first time home buying class is, to me, should be one of the requirement when you start your goal and your path to home ownership. Because you learn so much. You get the opportunity to ask, and you get to see all the different people that are going to be a part of the transaction. You get to speak with them and ask the questions that need to be asked. But you get the knowledge. So when you're ready to really go deep dive into the home ownership goal,
Mm-hmm.
you have a lot more knowledge with it. And I say if you have to take the class more than once. I've known people have taken those classes more than once, because every speaker gives you something different. And most of those classes are free. I like free things. My goal is free 99. If it's free 99, it's for me. And I'll tell people, let's do those.
I thought I was the only one that said free 99. Uh,
No.
Girl, it's free 99. It's free 99. So I was thinking about this book that I have. I have to find it. It's around here somewhere. But this was way back in the early 1900s, because you talked about them teaching kids now how to do checkbooks. And they definitely was not doing that when I was in school. I would see my mom doing it. I was like, I don't want to do that. It looks too
And we
hard.
don't do that no more. It's so sad. We don't. The other day, I felt like I was so silly because my HOA wants us to do a check. And I literally went blank. I was like, wait, how
Nobody's
am I
doing,
writing
like,
this check
who's doing a
again?
check? Who's doing a
And
check?
they want me to do a check. And it's like, okay, I have a checkbook for some reason. I found one. But I went blank as to how to complete my checkbook. And I said, this is a problem. This is so sad. I couldn't remember how to write a checkbook. I didn't know how to write the numbers out. I
Yeah,
was like, this is so crazy.
we're gonna go to a commercial because she needs it.
Yes,
It's like, no, I'm not gonna go. I went to a commercial last week, not this week. I want to talk
we
about
don't
this
need it.
because it's so awesome. So back in the early 1900s, and I gotta dig out this book, but it's a math book for a seventh grader. So, but when you open these books, they were not prepping these kids for college. They were prepping them for going out into the workforce. I'm looking at the book, and it has a whole line of jobs and how much that job pays.
Mm,
That was in the before they even got to the math. they called it arithmetic back then, and so that's what those seventh grader books look like. And when you first open them, you think you're going to see, multiplication or division or addition. No, it was about jobs, and they had the students talk about, what does your dad do? What does your dad do? Are you going to be in business with your father? This was a math class because they wanted them to start thinking about money and numbers
Mm-hmm.
early. Seventh grade, 12-year-olds, 12 years old. And the books had all kinds of wages and payouts and all kinds of charts and stuff. I was just like, yeah, we didn't get that. But yeah, like early in the 1940s, 1950s, yeah, I gotta go dig this book out. I did it, I showed it once, and I had my camera like overhead so that while I was, broadcasting, you can look down at the book, and I was flipping the pages. I was like, look at this, this is ridiculous.
Wow, right?
Yeah. So the children early on they learned, and so because they were now familiar with the workforce and numbers and wages and pay stubs and payouts and taxes, they were being prepared like the seventh grade. Not when you get to college and you getting ready to move out of your parents' house. They caught them like they like get over here. You're gonna learn about life early, and that
Mm-hmm.
just speaks to the level of responsibility and the people that we were preparing that next generation for going out into the workforce, and and that was back in the days where the husband worked and the wife was a homemaker, and things have
Mm-hmm.
changed a lot now both parents have to work, and then sometimes it's a single family home, so then now what, it's a single
Yeah,
family one parent home, and it just makes it a lot more difficult. But I believe that the program that you have, that you've created, and educating people is what is needed to go back to education,
the basic. Yeah.
finances. And it's so important because we have too many people on the struggle bus financially. So, and I just want to thank you for what you do.
You're welcome. It's necessary. I always say to people, when they introduce me, like, what do you do? I never say I'm a realtor first. I'm like, I'm your resource, because even though my title may be a realtor now, that's not how I started. I've always had a passion for homeownership. I've always had a passion for educating and being a resource to a person. And I don't ever have to be a realtor. You can always come to me because I'll give you information beyond that, right? Because it's what I've done for so many years,
Mm-hmm.
doing so. My title as a realtor is only 5 years, but I've been doing home ownership and and advice and education for a number of years. I'm like the one to age myself. 20 plus years. I have 20 plus years. I've been doing it for 20
Girl,
plus
shut
years.
up. Yeah, I'm way older than you, so just
It
stop the
sounded so
madness.
loud. Do you realize when we start thinking about how our age and we start counting up into, wait a minute, we're
Yeah,
counting
because
so
it's
many
like,
so long
I
ago.
remember when I was 15. I remember when I was 20. Yeah, that's a
Well, we all want to be grown, and now we're grown. I was like, "Oh Lord, can I go back? Can I give back the trial of being an adult? Can I go back to a child, with things?" And so I always say, be a resource. There's so many free resources out there that you could come to, other beyond myself. But there's so many local nonprofit that they get grants and assistance to help you, and it doesn't cost you anything to have that conversation. Doesn't cost you anything to get that education that you need to do.
absolutely.
And you guys use Google for everything and YouTube everything. Use it for some of these things, how to
Mm-hmm.
search for gun. But I want to leave with you just in case before I forget. If you're in Palm Beach County, they came out with the first ever grant. This is a new one. They just came out with a grant for
Mm-hmm.
first time buyers. The deadline to apply for that is the end of this month. You could get up to $50,000 in grants, for that. the income, and this is to help those who might be a little bit more beyond the lower income side of, the SHIP program. They still haven't come out with that one.
Oh,
That will
Shift
soon
is
come
doing
out.
it. Oh, Shift is doing it.
But right. So the housing that the group that does the SHIP program are the ones that's doing this 50,000 grant one too. And so I've been doing classes and educate and quick Zoom session on this. There it did come out. It is going to be a lottery system. It's going to be 60 people that are going to choose from it. And so they started the application last month. It's going to end the end of this month. I say take your chance, get all the documents you need to get to. The interest rate is a good part because they're the one that's doing the loan, and they not this loan, but the interest rate should be a little bit more competitive that way. But you
Hmm.
could get up to $50,000 in that one. Ship is not out yet, but they're having talks still about it for it to come up. But they're going to work this program out first. But they
Hmm.
also have lenders out there that has up to $25,000 in grant and assistance that is, focusing a lot in Palm Beach County because they need to rebound this side. So, and I have a lot of those lenders that I know of. Just let me know if anybody wants to know more of the program. But first and first, get your education, take one of these free classes that you can understand what it needs to be to get prepared to become the house hunter before anything else. So you can understand the hidden cost of homeownership because they are, it's not just a down payment and it's not just a closing cost. There's other things that goes into it, during the whole process. What you should do before, once you get a pre-approval, and what you shouldn't do, what they shouldn't do. I feel like we always have to remind them, don't buy a car. I know you
Oh
might
my
not
God.
like your boss, and I know you want to quit your job, but whatever you do, do not. You could quit the day you get the key. We don't care. Do not quit before anything else. Don't change your job. Don't even run your credit for a new cell phone, because what happened is credit phone. I've had a client who they lost their we it was so bad that they had to call a cops because the wife, I think, was gonna unalive her husband, because as much as we tell him, he went out and got a new cell phone. What happened is that they ran the credit, but it's when the cell phone, they actually had an extra payment on it. So because of that, the credit score went down.
Oh
When
man.
the mortgage company run the credit again, and they do run your credit before you close. They do run your credit couple of days before you close. They do run the credit sometime day off. Don't do anything because of that. They saw that his credit score went down, and the program they were going to put in, they were basically losing the down payment money. No, we had to fight tooth and nail for them to get some of the money back. And, the seller was able to give them the money back, some of it back. They didn't have to, because really it wasn't their fault. It was a fault of the husband by going and getting a new cell phone, because my goodness, he just couldn't wait to get a new cell phone. He could have waited, but you think
Oh
he couldn't
my
wait.
God.
So don't do anything beyond that. We tell people that don't breathe. Well, not breathe, because we need you to stay alive,
Yeah.
but don't do anything else.
Yeah. And we're coming to the top of the hour, so this has been a really good conversation, but I want you to briefly explain, why do they run the credit? They've already run the credit, which is how you got accepted, you know,
Yes.
everything, you were approved. I don't like to say the word accepted, approved. And then, so what are some of the reasons why they run the credit again?
Okay, so in the very beginning, what they do is they run your credit briefly. They get you all the little documents, and that's what we call a pre-approval. The pre-approval is say, okay, you know what? Based on the information we gotten from you, based on your income statement we got from you, based on your credit report that we've gotten from you,
Mm-hmm.
and you may have a 660 credit score, and your income support you to get a certain housing point.
Mm-hmm.
It's just a pre-approval. The pre-approval means that this is just me giving you a chance and giving you this amount of money. However, we still got to start going back and get all the documents again and do a deep dive, a deep research on you, making sure we dig up all your
Yeah.
skeletons at this point.
Yeah.
And so what they do is, they're taking a chance and say, hey, you know what? I am going to lend you this money, and I'm going to give you a good faith money, But however, know that what the more we go, once you get a contract, once you get your once you find a house and you go under contract, and then let's say the house is for 300,000, you're under contract for 300,000. Now they could really take what the value, the house price that you're going to pay for, and use that to help determine, your true amount of lending power that we could give to you. And that's when they start taking all your bank statements again, your income, and really do their research and what we call underwriting. Doing all the calculation,
Mm-hmm.
that's when you're actually going to start getting approval. So because of that, right before your loan, you get your key, and
Mm-hmm.
before the final days come, they'll run your credit again to making sure that, hey, a month ago you had a 660 credit score and
Yeah.
you had an income which doesn't change, and we gave you 300,000. We want to know, now that we did all the research and we did all the deep dive, we want to make sure your credit score is still 660. If it's more, good, but if it's less, that's a problem.
The
If
pro-
your income change, good. If you get an increase in pay, that's good. But if you change job and the income decrease, that's a problem. So I want to make sure whatever they gave you a month ago or 2 months ago is still the same. So they're going to recheck and finalize everything and firm everything up and say, okay, we're running your credit again, making sure nothing has changed. Because now we're going to give you the final true loan approval based on the house that you have a contract in. And that's what they're running credit, because people tend to change things, right? And when they find in that loan documents, you're certifying that, hey, I didn't change job, I didn't change credit, I didn't spend that money, I didn't take on a new credit card. Don't buy furniture before you actually have a house or a key, you know. So they look at all that again, making sure nothing has changed, and that's why they run the credit, making sure that what we looked at a month ago or however months ago is
Mhm.
still the same. If anything is better, but not worse, because if it's worse, it means that like I could get this loan,
The
and you can't get this
compromise.
loan. It means it
The
means
compromise.
you're gonna have to give up all that down payment, and nobody wants to lose 10,000,
No,
$5,000 of
nobody
down
wants
payment.
that. Nobody wants that. All right.
Unless you have the money. I don't know.
Right. But this is really, really good. A lot of great information. And like you said, we could talk about this for hours and hours because there's so much to know. So wherever you guys
Hmm.
are watching from, there's always going to be first time home buyer programs. Get educated, learn about credit, learn about your debt to income ratio, learn about things like just because you have a credit card for $1,000, don't think you have $1,000. You only have 30% of that. And if you can work with 25%, even better. So just keep it low, keep your payments on time, and don't just pay the minimum. If you have to, you have to, but don't just pay the minimum. Give them an extra dollar, give them an extra $5. It all
Hmm.
counts. Your credit score will raise up and you'll be a happier individual. All right. So again, her number is right here for Kenesha Wood, 917-701-3771. Oh my goodness. So just contact Kenesha and ask her. Trust me, she's a talker. You can ask her anything you want. She's gonna help you out. All right. And
I'm a talker when I have to educate. Otherwise, I don't even talk to people. No, blame.
all right. Well, I thank you so much for stopping by. This has been a great
Yes,
conversation, and
this was really fun. Thank you so much for having it.
of course. Oh, yeah, we'll have to have her back because there's so much to know. And let me know when there's another workshop going on. And I know you guys, if you're watching and you're not in Florida, check out the state and the city that you're in and look for these home buyer programs. And they will certify you, and it's good for about a year. I've done it. It's really good. And look for those grants in your city because I mean, every little bit of information that you get is going to help. Education, that is how you arm yourself. All right, guys? So, with that said,
And send me a text if you want to know about those programs and other programs you could do online, because they do have online ones you could get done. You do at your own pace. You send me a message and I could get those information to you too.
all right. So, and for those of you that missed us live, welcome to the replay.
Welcome to prophetic wind. Let God speak up just. God wants to speak today. Welcome to prophetic wind. Let God speak it. He will lead and guide you. He will lead and guide